You are listening to chartingwealth.com for Monday, the 25th of January, 2016. We always start with IYY. We have had a change in the market, actually a green up box in our candlestick patterns. It is an empty up box, which means solid up movement. In fact, the market ended on Friday and the total market up 2.6%. That is good news for people who have been losing their backsides in a market that just rolled over hard. Actually, those of you who follow us know that the market actually rolled over way back around the 2nd, the 4th of December, went down, then slid sideways, and then accelerated down on the 4th. That was the first trading day of the new year in January. And 1, 2, 3, 4, 5, 6, 7 down candles that represented 14 days of down movement on our 2-day candles. And then finally a 2-day up candle. Now, one up candle does not make for a change. In fact, it's not up higher than it started going down the prior 2-day candle. So in other words, we don't have this total retracement. We do have a crossover of the 2-day trend line, but we don't have a crossover of MACD. We have the derivative oscillators lost a little bit of speed, but it's nowhere near crossing over. So we have a down candle on the 2-day chart. Now, this is what's beautiful for those of you who've been with us and waiting for this. We're continuing to wait, but we got something interesting that could be setting up. We ended the day. We're going now to our 4-hour or half-day chart. Those of you who are watching, great. Those of you who are listening, we'll always explain to you what we see in the chart. We have a 2-day trend line shown on our chart as a big blue line that is moving down. It has been bisected by the up candle at the end of the day on Friday. We had a crossover on Thursday, end of the day going into, well, Thursday we had it at the beginning of the day. And what we saw occur is after that crossover happened, the derivative oscillator had switched over actually back on the 14th, but the MACD did not cross over on the 4-hour half-day chart until the 21st. We had 4 good up candles. It wasn't until the end of the day that the candle closed. That was the last candle of the week, closed above the 2-day trend line. So that has been breached. Now, what does that mean? In the context of all the down movement and the fact that the 2-day trend line has been breached, but the 2-day MACD has not rotated over, it means that what we are looking for now after this movement is we're looking for the chart to roll back over again as it did on the 4th. That would be a time to expect the market to continue its downward movement. Now, is that going to happen? I don't know. You don't know. But that's what we're looking for. And the minute we see a retracement, that is, the short chart starts moving the direction of the big chart. Think about this, little waves compared to big waves. You know, you can sit there and you can fight the big wave coming at you by pushing a little wave at it, but what happens? It typically gets swallowed up. Now, depending on the size and the length of the small wave, it can get strong enough to actually turn the big wave in the other direction. That's what we're comparing the short chart, the 4-hour, to the 2-day. Now remember, the 2-day chart is not that short. It's a quarter the size of the 2-day chart. I'm sorry, did I say that right? The 4-hour chart, half-day chart, is a quarter the size of the 2-day chart. So if we watch this retracement happen and then the market itself roll back over going down on the short chart and crosses the MACD going down, that is our punch signal to look at getting into any of the charts that set up this way, whether it's IYY, whether it's the S&P 500, the QQQ, which is the NASDAQ 100, or gold. Gold's actually been going in another direction. We'll talk about that in just a minute. So we're watching with bated breath to see just what happens. Now, we go back to our 2-day chart, and we see SPY. It was actually up 2.05%. It's also breached the 2-day trend line. If we go to our 4-hour chart, we can see that it too crossed over about the same time the big chart the IYY, the big index. And again, remember, IYY is the total market. SPY is the Standard & Poor 500, which are the 500 big stocks, big movers, lots of volume. So the charts many times look the same. I always like to see what's going on in the total broad market and then start dropping to smaller chunks of the market. That would be the SPY, the S&P 500, and the QQQ, which is the NASDAQ 100. So it actually crossed over and breached the 2-day trend line in the morning. So we've got more movement. However, again, the movement that you see has crossed over it on the short chart, but it has not made an impact yet on the big chart. So again, we're looking to see if this is going to be a short-lived up move and if it rolls back over and starts going down. If that is indeed the case, then we jump back in and we get another chunk of that down move. That's how we read charts and that's how we use them. Now again, the caveat is we're not telling you anything about spending real money. Only advice we give here, we don't give any advice. The only educational thing we ask you to do here is to set up a virtual trading account and practice. Once you learn everything you can and you've got this down, you can start making your own decisions. But we are not a stock calling service. You can see all the disclaimers on our site. We're not telling you to go out and spend any money at all. We're telling you to practice with virtual money. Okay, that is where we are, penetrating above the 2-day trend line. Now, let's go back to the 2-day chart and let's look at the Qs. It was up almost 3%, so a big up day for the Qs on Friday. And we see that, of course, as we're looking at the chart on our 2-day chart, we can see that those 7 down candles were penetrated by an up green candle, open box green candle. We still don't have a crossover on the MACD, so there is no up movement that we see in the MACD. That doesn't mean it's a trade we get into moving up. Remember, we're trend following. We're not calling this as a change and just going to jump right in like a crazy person. But we are going to pay attention to this, and we're going to go and look at our 4-hour chart. And yes, it did penetrate in the morning and stayed up in the afternoon, the 2-day trend line. So that's been broken. The MACD crossed over in the morning of the 22nd on the short chart. So again, if this rolls back over and goes down, great. If it keeps going up and pulls the 2-day chart up, then we'll wait for a rollback. And then again, the opposite, a confirmed up move. But in the meantime, we're waiting for this up move to wear out and roll back down unless the 2-day chart changes on the MACD. Does that make sense? Again, we're trend following. We're trying to catch the safest part of the game. Sometimes there's a trade, sometimes there's not. But the number one thing you want to do is capital preservation. You don't want to go out and blow your hard-earned money. You want, or the hard-earned virtual currency, you want to make sure that you're doing everything to protect your money first and foremost, and then to make a gain when it's allowable. That's what makes the non-professional trader, the professional investor, the professional trader, that is the people on Wall Street, they've got to trade. You don't have to. You can keep your funds secure until you see something that you recognize that makes you feel comfortable getting into that move. That's the trick. That's what makes you actually potentially more powerful than the guys on Wall Street. They got to trade. You don't have to. So that's where we are on the Qs. Now, lastly, we're going to go back to our 2-day chart. We're going to take a look at what's up with gold. Of course, as the market surged going up, you would expect gold to go down. It has not crossed through yet its 2-day up trend line. That has not happened on gold. Gold crossed over going up around the 14th of December and has spiked up and then sort of slid sideways, moved up again, had a bit of a down, 2-day down candle, but not a lot of downward movement. It was only down less than 0.5% on Friday. If we revert back to our 4-hour chart, we can see that gold has been sliding sideways for the last 2 days. It's really not done much of anything. May cross over going down, and if indeed it does, again, might be something to look at. We keep hoping that this 4-hour chart is going to be a good trading chart for you. It's not shown itself in this last up move to be very good because all it really did was slide sideways. And that truly is when the MACD does not work well for us. We talk about that. But boy, we had a great run until December on this 4-hour chart, and we had a lot of sideways sliding action. Up until that point in early December, we sure saw the 4-hour chart giving us some great virtual trades in gold up and down. So we'll continue to follow it. Gold is always worth paying attention to because it is gold and it can sure show you other things that you're not seeing in the market. Now we know gold is manipulated and played with a lot, but it is important to follow and can be a store of wealth, particularly in tough times. So continue to pay attention to it. Gold starts soaring, might be something you really want to get in there and learn how to virtually buy and sell it, trade it, invest in it, make money off of it. That is where we are. So we're still looking to see if gold confirms a continued up move or a down move. Let's just continue to watch. Again, still gold is up on the big chart and it's still up on the small chart. So continue to watch it. It's not crossed over going down yet. Hopefully that up move will continue and it'll make us continue to feel good about that 4-hour chart. That is where we have ended the day on Friday as we go into the trading week on Monday. Hope that you have a great week. Pay attention to the charts. Also, if you've not listened yet to our weekly review and forecast, we're going to record that right after this one and get it up for you too. Something you need to listen to the beginning of every week because it's going to tell you what happened over the last week and what big things we're looking at in the news that could affect the market in the coming week and sort of give you an encapsulation of where things went on the big weekly chart and then the daily chart for that last week. It's the only time that we really look at news events, both previewing them and post after the fact. And we look at the weekly chart. Thanks so much for listening. If you've not signed up for our newsletter, you need to do so you can get our daily reviews, our weekly review and forecast, and 2 big bonus items. You get the chart layout that we have that'll work at freestockcharts.com with our MACD settings, our Bollinger Bands, exponential moving average, the works, derivative oscillator 2. You'll also get a link to our 15-minute How to Read a Stock Chart video. We thank you so much for listening from chartingwealth.com.